Imagine getting paid simply for owning stocks. Money flowing into your account month after month without having to clock in or out. That's the magic of dividend investing. In today's video, we're diving deep into how you can build passive income for life through dividend-paying stocks. Whether you're a complete beginner or already investing, this guide will give you the step-by-step strategy to create a stream of income that could one day cover your bills or even replace your job. What are dividends? Let's start with the basics. A dividend is a payment that companies make to shareholders out of their profits. Think of it as a reward for being an owner of the business. For example, if you own shares of Coca-Cola, you'll receive a dividend 4 times a year, just for holding the stock. Dividends are typically paid in cash, directly into your brokerage account. Some companies also offer a dividend reinvestment plan, or DRIP, which automatically reinvests your dividends into more shares, helping you compound wealth over time. Not every company pays dividends. Growth companies like Tesla or Amazon usually reinvest profits back into the business. Dividend companies, on the other hand, are often mature businesses with steady cash flow, like Procter & Gamble, Johnson & Johnson, or McDonald's. Why dividend investing is powerful. So why focus on dividends? Number 1, passive income. Imagine your dividends covering your rent, groceries, or even your retirement expenses. That's income you don't have to work for. Number 2, stability. Dividend-paying companies are often established businesses with reliable profits. They've weathered recessions, market crashes, and still kept paying their shareholders. Number 3, compounding growth. If you reinvest dividends, you buy more shares, which then pay even more dividends. Over decades, this snowballs into massive wealth. Number 4, protection against inflation. Many dividend-paying companies actually increase their payouts each year, which helps your income grow as the cost of living rises. This combination of income, growth, and stability is what makes dividend investing such a powerful long-term strategy. Key metrics to watch. Now, not all dividend stocks are created equal. To build a strong portfolio, you need to understand a few key metrics. 1, dividend yield. This is the annual dividend payment divided by the stock price. If a stock pays $4 a year and costs $100, the yield is 4%. But be careful. An unusually high yield, say 10% or more, could be a red flag. 2, payout ratio. This tells you what percentage of earnings the company is paying out as dividends. A ratio under 60% is generally considered safe. If it's too high, the company may struggle to maintain its dividend. 3, dividend growth. Look for companies that increase their dividend year after year. This shows financial strength and rewards you with rising income. 4, dividend aristocrats. These are elite companies in the S&P 500 that have raised dividends for at least 25 consecutive years. Think Johnson & Johnson, Coca-Cola, and Procter & Gamble. By focusing on these factors, you're not just chasing yield. You're building a portfolio that can last. Strategy for beginners. All right, how do you actually start dividend investing? Let's break it down step by step. Step 1, open a brokerage account. You'll need a brokerage to buy stocks or ETFs. Pick one with low fees and easy access to dividend reinvestment. Step 2, decide your approach. You can buy individual dividend stocks or invest in dividend-focused ETFs like VYM, Vanguard High Dividend Yield, or SCHD, Schwab U.S. Dividend Equity ETF. ETFs give you diversification with less risk. Step 3, diversify across sectors. Don't put all your money in one industry. Own companies in consumer goods, healthcare, utilities, finance, and technology. Diversification protects your income stream. Step 4, reinvest dividends. Early on, if you're just starting out, let dividends compound by reinvesting them into more shares. This accelerates your wealth building. Step 5, shift to income mode. Later, once your portfolio grows large enough, you can stop reinvesting dividends and start using them as passive income, whether that's for retirement, travel, or financial freedom. Real-life example. Let's look at an example. Suppose you invest $10,000 in a portfolio yielding 4%. That gives you $400 in dividends in year 1. If you reinvest those dividends and the portfolio grows by just 6% per year, in 20 years, your portfolio could grow to over $32,000, producing more than $1,200 a year in dividends. Now imagine scaling that to a $200,000 portfolio. That's $8,000 a year in passive income, enough to cover major expenses. And if you focus on dividend growth companies, your income will likely rise over time. This is the power of patience and compounding in dividend investing. Risks and mistakes to avoid. Of course, dividend investing isn't risk-free. Here are some mistakes to avoid. Chasing high yields. If a stock is yielding 12%, it's often a trap. The company may be struggling, and the dividend could be cut. Ignoring fundamentals. Always check earnings, payout ratios, and debt levels. Lack of diversification. Don't rely on just one or two companies for your income. Spread across sectors. Forgetting taxes. Dividends may be taxable depending on your country. Factor this into your strategy. By staying disciplined, you can minimize risks and build a sustainable portfolio. Building a lifetime strategy. Dividend investing is not a get-rich-quick scheme. It's about playing the long game. Start small. Reinvest consistently. Add money every month if you can. Over years and decades, your dividends will grow from pocket change to a meaningful income stream. Think of it like planting a tree. At first, it's tiny, but over time it grows, branches out, and eventually provides shade, and in this case, financial freedom. Your goal is simple. Build a portfolio of high-quality dividend stocks or ETFs. Reinvest early, and eventually enjoy the passive income for life. So there you have it, dividend investing explained. By focusing on quality companies, reinvesting your payouts, and staying patient, you can build a stream of income that lasts a lifetime. If you found this video helpful, hit the like button, subscribe for more investing content, and share this with someone who dreams of financial freedom. Remember, the best time to start dividend investing was yesterday. The next best time is today.